Mind and Money podcast. I'm Sherry, a financial coach.
And I'm Val, a financial planner. Today we're talking about life insurance, which is something that I find myself explaining more often than not, that I'm duly licensed to also put in place for clients, which is fun and lets me know I should talk about it more. So we want to really just go over life insurance 101. What is it? Why would you get it? What does it take to get? Anything else?
Maybe who does and doesn't need it, because not everybody needs it, but a lot of people need it that don't have it, or kind of like what is enough?
Yeah. And that's ever changing. But so life insurance, what is it? It is a policy put in place on a life. So I have personal life insurance. This means that if and when I die, money pays out tax-free to my beneficiaries. So I've designated people on my policies that it goes to, family members. And what that allows them to do then is pay for my final expenses, my funeral, and pay off any debts, and provides a cushion for them to continue living, right? It means that houses don't need to be sold. You don't need to move out of any apartments. Like, it just provides financial security if you're no longer here. And even if you're not bringing in like the breadwinner in a family, there are still things that you do that would need to be done by someone else and now potentially need to be paid. So whether it's like, childcare, laundry, those pieces now need to be done, and that surviving spouse will have to outsource those.
Or take a job that's lower paying and less hours and more flexible. And one of the caveats too is that and we've mentioned before, we're Canadian, so we're talking specifically about Canadian-based insurance. I'm not sure about taxable situations for life insurance in other countries, but just wanted to stick that out there as well. So let's start with talking about what are the different types of insurance that somebody can get as far as life insurance.
Okay, so just sticking to life insurance, there's and personal life insurance, I should preface, because there is group life insurance, which is offered through your employer, typically their package. That's an awesome bonus. We don't want to ever rely on that, because your employer might change their package. You might change your employer. They might no longer have coverage. So it's awesome to have.
But you might get fired.
Right, right. And if you're fired, it doesn't go with you. If you retire, there can be different privileges that allow you to take part of it, but that's a whole other rabbit hole. So when it comes to personal life insurances, there's two main types. One is temporary and one is permanent. Very much so like their names. Under those two umbrellas, the temporary, also called term insurance, is in place for a set amount of time. Temporary insurance. The permanent is also called universal life, participating, whole life. It's in place lifelong, ideally. It's in place until you die. So your permanent policy will pay out. You will die one day. Your temporary policy, ideally, we outlive them. I got a term 20 when I was 19, so that'll take me till age 39. Ideally, I outlive that policy. The differences between the two. So with your temporary insurance, it's in place for a set amount of time. You can choose any term that makes sense from 5 years to 50 years, which means for that term, the price is locked in and the coverage amount is locked in. So if you have a term 30 for $1 million, that means that from years 1 to years 30, there's no price change. There's no coverage change. So that stays the same all the way through.
No surprises.
No surprises.
And you can also stack the different term policies too. Something so like if you know you need $1 million for the next 10 years, and then after that you only need it steps down, you can get a couple of different policies and stack them up together.
Yes, to make it make sense for what your kind of seasons in life are going to look like. But term insurance is great for big years, and when I say that, I mean higher debts, because it is more affordable than permanent insurance. So
pretty significantly.
Yes, because it's ideally we're outliving that policy. It provides us peace of mind, and if something happens, it will pay out. But the goal is really to never use that insurance. It's to pay for it, and then when it's done, there's different options there, but it's done and it served its purpose for us.
Yes. It's like car insurance. You have to pay for it, and you hope you never need to use it. And it sucks to put money out for something that you never get money back for, but then
if something happens,
yeah,
you're really glad that you put it in place. So that's the term side of things. So it's a set amount of coverage, a set amount of time, the price stays the same, beneficiaries are named on that policy, the funds go to them tax free. It does not form part of your estate. So if your life insurance policy says that your estate is your beneficiary, some situations that's the only option. But if you want it to go to a person or a charity, please name them directly. It's a form, update it, because then it's not going to go through your estate and go through probate, and then you're going to pay taxes on something that you didn't have to pay taxes on.
Quick reminder, do you need to update your beneficiary? Does it, like, is it your mom and it should be your spouse, or is it your spouse and your ex-spouse and it should be a kid or your mom again? Like, it's something that's, you don't think of it a lot because it's not something you frequently change, but if you don't change it and you need to, like, it could be a huge pain in the ass because maybe your ex is just going to keep the money and not give it to your family. And that's
shouldn't laugh, but yeah, that's a situation that's happening right now. Is not my client, but a family member of my client passed away. His life insurance went to his ex-wife, and like the mom who did most of the organizing of the final expenses and stuff is not going to see any of that. So you can't always, like, just get it down, fill out the form. You cannot trust that that person will do the right thing.
Yeah, and I think that's true with a lot of money things. And
yes, money and death make us weird. You really see some true colors fly with money and death. So which is exactly what life insurance is. It's money when you die.
Yep.
So get it going to the right people. That's the term side of things. A lot of the times I'm putting in term for younger people. When budget is the most important thing, we're looking at shorter terms. So something is better than nothing. I've never had a death claim where someone goes, that's too much. Like, I've never had that situation. So putting it in place, even I had a client where, because life insurance is dependent on your health, your age, that really affects your premium. He doesn't have a mortgage yet, but he's in the market looking to purchase a home. So we put his term policy for $500,000 in place, knowing that a mortgage is on the horizon. But if his health changed between now and when we purchase that home, we already have the life insurance. So it's not going to impact him. So kind of like locking it in at our prettiest health picture, also an important piece. The younger we are, the better it is, the lower the cost. On the other side is the permanent insurance. So permanent insurance has some similar factors in terms of the beneficiaries. It pays out tax-free to them. Now, there's different policies with different options, and I don't want to get too into the weeds of it, but permanent insurance is really great for things like if you're planning for a capital gains, if there's a cottage that your family wants you to inherit, a farm, those sorts of things. It's great for like that long-term legacy plan / succession plan. They used to be really popular policies for kids. I'm seeing more of a trend towards term now for kids because we want higher amounts of coverage. $50,000 or $25,000, what a child's policy used to be, isn't enough now that we're thinking of, if something happened to my child, there's a funeral. So there's $25,000 potentially. So that's half the policy. And now my spouse and I within 2 months need to be back at work.
Yeah.
And the grieving, that aspect, the healing piece of it is not, we need more financial support at that time, is what we're seeing. So the permanent side of things, really great for long term.
Yeah. And when you're looking at it too, like as a child gets into adulthood, $25,000, $50,000, 20 years from now, 30 years from now is going to be like basically nothing. And yes, the premiums can be pretty low, but if you compare what you can get for a term, even for like a 30-year term or a 40-year term, I didn't know you could go 50-year term, but like if you look at a 50-year term on somebody who's brand new to the world, compare it to a whole life, there's probably a pretty, maybe not super significant because if it's you go 50-year, but
there's a significance in the amount of coverage you're going to get. Yes. So when clients look at the benefits of permanent insurance, when we're learning about the two types, we typically like the permanent insurance. We gravitate towards it because we see, a guarantee. It grows a cash value for us. So those policies can be like a bit of a hybrid between an insurance policy, but it grows a little bit of an investment within it. So people really like that. But then we look at, okay, my budget is $40 a month, let's just say. On the term side, that can get me $500,000 for 30 years. But on the permanent side, that can give me $15,000 and it grows over time. But to get up to that $500,000, it's never going to happen. So we look at, again, if that client were so gung-ho and like, I need to have permanent insurance, and something happened to them, and now I have, okay, to your spouse and your kids, I have a $15,000 check, that's not enough.
That doesn't go
Typically.
very far. Yeah. And I see in like when the insurance conversations come up in Facebook groups and
Yes.
like online on Reddit, stuff like that, I see a lot of people who are insurance salespeople, insurance professionals, really like tooting the horn of like a permanent whole life insurance policy, leaning heavily on that investment type. But then I see other people on social media, and like you take everything you see on social media with a grain of salt, but you see other people on social media who, like, there was one post I saw recently where they actually like broke down, okay, so if you're paying this much into a whole life insurance policy and you're doing it for the investment portion, they went down, and it's actually quite like this person was like putting money into a shredder, which very, very click worthy. But they were going through like, okay, if you're paying a whole life insurance policy before the money goes to invest, first you're paying for the insurance, and then you're paying this fee and that fee and this fee,
right?
And then you're left with like 30% or 50% of the amount you maybe perceive was going into an investment that's actually going in, and then you have very little control over what it's invested in. And if you want to have that investment portion, there's lots of other ways to maximize that if you've got room in your tax sheltered accounts.
Yes. And that's where working with someone who looks at your whole picture is really important. I think if you're just working with someone that is an insurance sales person or an insurance advisor, they are really hyper focused on one area and they might not be looking at the whole picture. And they, which will be in a later episode, is working with people that have the right why as what they do. They might not be making a recommendation to you based on what's best for you. They might be making it on what's best for them because it's typically a commission-based sale, which the regulators are bringing more light to and more awareness, which is fantastic. But I just met with a client and they like, term is the answer. They have gobs of debt because they invested in a farm, which is like super exciting, but they need a lot of coverage and the budget is not there right now. So we're like, term is the way to go. Originally, the insurance advisor that they had met with was encouraging them to do $2 million worth of permanent insurance, which was, I think the premium was like $800 a month, something wild. And I'm like, that's so not even close to being what they need. But that insurance advisor would have had an awesome commission.
Well, and I'm not sure how open you are about talking about or how much you're wanting to like share with that, but like commission based, the more you're paying for insurance, the more the person that's like helping you get that insurance is making. And like it's really an area where I'd never be comfortable buying any type of insurance online. Like I want to talk to a human but then I want to talk to a human that I have a lot of trust in, because
absolutely
you're going to that person, you're trusting them with this huge financial decision in your life. And also if something were to happen, that's the person you're going to be interacting with to like get the policy paid out. If you go to somebody and you're talking to them about insurance or any type of like financial and anything really, and your gut is telling you that they don't have your best interest at heart, you leave an appointment with them and you're like, fuck, I have no idea.
I trust that energy.
Yeah. If they're like, I left and I have more questions now than I have answers, and you don't feel like they're communicating to you based on like your level of knowledge and where you're at, and you don't feel comfortable asking them questions, like those are all red flags for me to be like, run the other way. There are so many people out there that can help you with that. And if the person you meet with, maybe it's your parents' guy, your brother's guy, your friend's guy, like if it's not somebody you feel comfortable with, look for somebody else. Ask other people for referrals. Referrals is a great way to find an expert, but it's not just because somebody referred you doesn't mean you're obligated to work with them. Find somebody who you trust, who you're comfortable asking questions of, and you feel confident in what they're like sharing and explaining to you, and you're leaving understanding what they're recommending and why they're recommending it, what your alternative options are. If you're only being given one option, like again, red flag.
And there's a lot on social media. Like, yes, insurance salespeople are like whole life, that's the way to go. But there's a time and a place. There is a time and a place. And is that your number one place to put money right now? Like, we have to look at that big picture. If there's other goals, so just work. Yes, back to Sherry's point, working with someone that's going to explain it to you. But life insurance, it's a policy on yourself. If you die, it takes care of things that you're not going to be here to take care of anymore.
And a lot of people that I start working with, as far as financial coaching clients, they do have a big gap in insurance. A lot of times it's like, yes, I have insurance through work. And a lot of situations, they don't know how much it is. But then the concern is that it is through work and it's only attached to your job and you want to have some independence there. But a lot of people, they're carrying debt when they come to work with me most of the time. And they think about, well, why do I want to add another cost to my budget? And I think a lot of people don't know enough about the different types of insurance to understand that there is options at different price points depending on how old they are. So
yeah,
I think insurance is more affordable than people think.
When we're looking at when I work with clients, we look at, okay, what factors impact your life insurance approval, but then we also look at what are we looking at, like, to make those decisions. So how much coverage do we need? How long do we need it for? Because I don't need my mortgage covered in my 80s, hopefully. And the last one is like, what is our budget? And to understand that, we have to look at our big picture, right? So looking at those numbers and being like, okay, because we have to make sure it works in that plan. Does it mean that we might have to make a slight lifestyle change? Maybe.
Yep.
But it's typically all of my clients' life insurance, I should say, is typically less than their phone bill.
So, and I'm open to sharing. So my husband, so we got new policies with Val in last fall.
Yeah.
So just last year?
Ago. No,
was it 2 years ago?
Yeah.
Anyways, time flies. And so at the time, my husband would have been like late 40s. I would have been early 40s. And we each got coverage for $350,000 for term. Yeah. Oh my God, this is horrible. I think it's 20 years. And in combined, we pay around $70 a month for that. And previous to that, we had, I don't know how old we were at the time, but it was 20-ish years ago.
It would have been in your 20s, so like late 20s and mid 20s.
Yes. So then we each had 500,000, and sorry guys, his premium was like 45 and mine was like 29. So it's based on how old you are when you get the policy, but then how long the term is. And the idea for us of term is that we're going to get to a point where we don't need income and we're living off of retirement investments, and then
debts are paid for.
Yeah, and then not having insurance isn't an issue, because if one of us passes, the investments for the other, they don't just poof and disappear like some would, like if it's like CPP and stuff like that. Maybe not disappear, but like shift. But
yes,
for the most part, goal of getting to home paid for, not a whole lot of debts, like lower living expenses. And then once that person passes, then you're still going to be okay. And that's the whole point, is like, you don't want to be dealing with the death of a loved one or a child and pile on the, like, holy shit, now we don't have that income, or we don't have, if it's a stay-at-home parent, I now need to pay for daycare and this, like, all these other things. So it's all about like taking care of yourself,
leaving people in a good place, leaving the people that mean the most to you and the least stressful possible situation if you're not here.
Yeah.
Right? Because we can't control the grieving, the healing process, but we can make sure that the financial aspect's taken care of. And to Sherry's point, ideally there's a time in your life where you become like self-insured. I still have a whole life policy, but that's personal preference. I want to know that one day that whole life policy, it'll grow, and then it will be something that pays out within 7 to 10 business days when I die, and then my investments will probably trickle in later, like just depending on how that process timing wise, it's going to be the fastest money to get into someone's hands to take care of things. But it isn't in terms of like debt at age 80 or 90 or 100. It won't, ideally, I won't need it.
Yeah.
It will just be an added piece to my financial plan that provides security for me.
Yeah. So if you've been avoiding talking to somebody about insurance because you think it's going to cost hundreds of dollars and you're overwhelmed with the options and you don't have it right now, here's the sign.
Yes.
Pick up the phone, shoot somebody a message, ask your loved ones who they deal with, or like connect with Val if you're
in
Canadian.
Ontario.
Oh, only Ontario?
Yeah, I'm getting my license in BC as well. But
anyways, reach out to Val if you're in Canada and maybe she'll get her license in that province or territory.
Yeah.
Because I've sent multiple clients to Val. I've worked with Val myself for insurance, and she's like shameless plug for her. She's like, she's not going to steer you wrong. Like there are situations when like you could have done something, recommended something different because like financially somebody could afford it and would have padded your income more,
totally.
but that's not your heart. So think about protecting the people that you love. And if you need insurance, which like if you have people that depend on you financially, having insurance is definitely an important piece of the puzzle that you should consider adding. So
and it's a blanket of security that I don't think I have a lot of clients that don't realize how good it feels to have until they have it.
Yeah.
And it's like there was this weight on my back that I didn't realize was there.
And the process to get it is not as difficult as you might think it is either. Like it's
just, yeah. And that's just,
it's different for everybody depending on health situations, but being able to get the process started and you might end up like through it in like a week and be like, whoa, that was way easier than I thought it was going to be. So
super dependent on situation, but it's not as bad as you think. Look into it. Talk to someone that you trust and love and value.
And if it feels painful, try it with somebody else who would make it feel less painful. So yeah, I highly encourage you to look at your insurance. If you have insurance through work, understand what your policy is, and then look for outside options if people are dependent on you financially, because it's important.
Thanks for listening.
We'll see you next time on the Mind of Money podcast.